Welcome to the March 25th, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman. Thank you for joining us on our brief, informative financial tour of the global financial markets. We begin with Dow Jones Industrial Average this week wilting actually at the lows of the week, back below 25,600. Wow, it looked like it was going to be a nice rally, and since then it's been interrupted. What diagnosis do we draw from that, and what diagnosis would have helped us back here? A range-bound market, a market that's going to have a hard time breaking this high point near 27,000 and maybe even this low point of 22,000. What do you do when the market is sideways? You're not going to get a growth assumption in the indexes with a global slowdown overhang, in my opinion. So how do you solve a portfolio equation that says, here's what I'd like to make versus a market that is not necessarily going to go up in value overall? That takes indexing off the table, and this weekend's program at NetWorthRadio.com goes even more in depth into the solutions. I was lucky enough to be on the Westwood One national broadcast with Jim Bohannon this past week, and we covered what about the next recession? Could it happen by 2021? Good news, 7,580,000 jobs posted to be filled. That's not a recession yet. That's 50% better than the 2007 peak in the number of jobs out there. All right, we did get a bizarre activity in the 10-year Treasury and the 30-year Treasury this week. Notice at the end of the week, whoa, this big old red line right here, big drop. The yield curve actually inverted briefly. There's a Wall Street superstition that when the short rates, namely this week, the one-year T-bill fell below or was above the yield on the 10-year Treasury. That inversion, where you could get more for 1 year than 10 years, doesn't make any sense, does it? I'd rather just go for a year than 10 years with duration risk. Well, the reason being the global slowdown thesis is being underscored. We got numbers out of Europe this week on manufacturing contracting year over year. Chinese exports last week contracted by 20% year over year. That is a global slowdown, and the treasuries responded. People like to buy treasuries when you're not going to get growth. Well, how much growth are we going to get? Right now, the estimate's between 1% and 2% out of the U.S. economy, so there's not much inflation danger. And they bought treasuries with both hands. Good news if you need a mortgage. Let's take a look at that impact next. But we've also got the 30-year Treasury dropping down close to 2.8% at the end of the week. That is, as you can see, a very, very low point. There were tons of predictions that the rates would spike as the Fed raised the short rates. And no, actually, we're below where their relentless campaign to raise the short rates actually began. And you can see on this 10-year chart, the 10-year Treasury, which is the mortgages are derived from that. But you can see this huge decrease in the interest rate on the 10-year Treasury. That's a cash flow panic. You want to find out more about how to invest in a cash flow panic? Well, we cover it at NetWorthRadio.com. Here's the clue. Get paid to wait. Buy stuff that pays more than 3%. 4% or even 5%, buy stuff that pays you to wait. That way you've got that safety margin, you've got income to reinvest, to live on. Those are the secrets of making it through a range-bound market, especially when treasuries aren't going to compete with those other asset classes that pay more. This is good news for fixed income, yes, and it's also good news for those that know what sectors that we like, for example, energy infrastructure. It's not a recommendation until you come down, get a plan from the team that cares, and you can set that up today at networthradio.com. Just fill out the preliminary client questionnaire. Well, good news if you're going to refinance. We did see the bank rate. Now, this is a 1 week old figure. There were mortgage quotes at the end of the week for 30-year mortgages below 4%. I'm sure you have to have a good credit score, but still, that is good news for the housing market, at least helping the housing market not to go negative. And this is the 15-year mortgage rate. You can see both of those plummeting and going even lower than what this chart shows this week. Now, what's the Fed probability of a rate raise? We said back in December that it is unlikely the Fed's going to increase rates for all of 2019. And they had said they were going to keep going up relentlessly. Why did we say that? Bloomberg was our source, and here they are. This is the probability that they'll stay exactly where they are. Notice the probability that they'll actually trim rates back. And there's not a probability that they're going to go higher based upon the research that we found in Bloomberg. The Fed underscored that on Wednesday. That's part of the rate drop today that we've seen in the past week. What they're saying is they're not going any higher on the short rates, and the long rates have actually inverted a part of the yield curve. The inversion is a superstition with Wall Street that things are bad because it just doesn't make sense to get paid more for 1 year than 10 years. And this underscores that things have changed dramatically in 2019. It's probably good news for high cash flow assets. Now, is it a recession? Well, Richardson-based Lennox International, the HVAC maker, that's a construction read. Well, look at this. Oh my gosh. Lennox trading above 260 for the first time in their history. Congratulations to Lennox International and the shareholders. Not a recommendation, but it's just a read on the economy. If the construction market were already rolling over, we'd probably see it here first because stocks tend to anticipate. That's an all clear. Just a note on biotech this week. Wow. Biogen, you can see their high point at 442 back there in 2015, 375 or more this past year. And now we see an absolute decline in Biogen, approaching 200 actually at the lows of the week. They had an Alzheimer's drug. They pulled it from late stage trials, and the stock just getting absolutely crushed. What does that underscore? The danger of traditional growth investments, be it biotech or tech. We're finding better growth numbers in year-over-year revenue from actually energy infrastructure. Go to networthradio.com to get more details. Better yet, fill out the preliminary client questionnaire and update your plan for a market that may not provide growth, but where you can still succeed. I'm Spencer McGowan, your financial weatherman, President, McGowan Group. Thank you for joining us. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at networthradio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of networthradio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.